All right, good morning. Uh, Happy that everybody's here. I want to say first that at the CARE conference that we had this weekend on Saturday, we had a really good turnout for us seniors real estate specialists networking meetup group. We had a great time. So I put just a little set of pictures on page 2 of the bulletin. And Deidre and Katie gave really good presentations. And we also had presentations from a couple of other people that I'm going to bring in to come be a part of our group. So today we're talking with Eric Lowell. Um, I'm really, really interested in learning about crypto and real estate, something that we should all have a cursory knowledge of. And then as we go along, can develop a deeper knowledge, and Eric's going to help us out with that today. So go ahead.
Well, thank you for having me. And going back, gosh, I think almost to April, I think is when Skip reached out and asked if I'd have any interest in joining. And the answer is yes, because I love talking about crypto. And it's not really so much talking about crypto, it's educating people on crypto because cryptocurrencies, crypto assets, digital assets, whatever term you want to use, we're very much in the infancy stage. We're really only 15 years into this, and there's a lot of misunderstanding. There's a lot of lack of knowledge. It is incredibly confusing. I will openly admit. I am about five-ish plus years into my crypto journey, and it took me a good 2 years to wrap my head around it of why is something that exists only in a digital format worth anything of value, and what is blockchain technology, and what does it represent, and why is it important? Why do we need it? And so my I guess initial warning today is I will not make any of you an expert in the short time we have today, and that is not my attempt whatsoever.
Hmm.
Um, but either way, having said that, so just to kind of give you a quick, little bit of background, I work for a company called Bitwise Asset Management. We're actually based here in San Francisco. We're about 120 employees. We manage about $15 billion in assets on behalf of clients. We are what is referred to as a crypto native asset manager. We are an asset management company, which is to say we run investment strategies for people to invest in. And what I mean by crypto native, it just means that all the investment strategies we run just happen to be crypto focused. That's all I'm going to say about that and about the company. Our topic today, obviously, is really what eventually will probably be the intersection of crypto and real estate, and what does that look like? And the good and bad, I guess, of our purpose today or our conversation today is we're very, 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 very much in the infancy stage of where we're at with crypto and real estate. And I even talked to a Skip about this back in April. And he said, hey, can you talk about where we're at? And I said, I got to be honest, Skip, there's been a lot of talk and a lot of projection of where this is going, but we haven't really gotten there yet. And what I mean by that is there's a lot of talk today, and again, I apologize if we get a little confusing here, but you know what you're going to see going forward is something called the tokenization of real world assets. And what that means is at some point down the road, you're going to see a lot of assets, whether it's financial assets, hard assets, you're going to see them moved onto blockchain rails and exist in tokenized form. And in my world, which is tradition, a lot of my world is traditional finance, dealing with stocks and bonds and mutual funds and exchange traded funds and private real estate, private credit, private equity, all these things that can be invested in and exist the way they exist today eventually are going to be moved on blockchain rails. And what I'm going to simplify for that to not go too far into the weeds is moving things on blockchain rails just means it is accessible 24/7, 365. When you think about the stock market, as you probably know the stock market today, the stock market only actually operates during market hours here in the US. That's 6:30 Pacific time to 1 o'clock p.m., 6:30 a.m. Pacific time to 1 o'clock p.m. Pacific time, meaning you can technically only trade stocks and bonds and mutual funds and ETFs during that time. Now, you could do some things after hours, but technically nothing actually happens except during those actual market hours. And the whole point of crypto and cryptographic technology as we know it, especially with the invention of Bitcoin back in 2008, was really nothing more than to move finance, money, investments into the digital age. Well, when we move things into the digital age, essentially moving them onto blockchain technology, these things now become accessible 24/7, 365. All cryptocurrencies, and you've probably heard of some of these, maybe you haven't. We're not going to spend too much time on any of them individually today, but you've probably heard of things like Bitcoin and Ethereum, maybe, or things like Solana, maybe Ripple. Maybe you've heard of some smaller ones called Avalanche or Cardano. I'm going to use those two momentarily. These are nothing more than cryptocurrencies, crypto assets, digital assets. They all run and provide a legitimate service, and they all issue a native token in order to use their service. But what's going to happen is all of those cryptocurrencies trade 24/7. They don't operate on market hours. And the reason why is because they operate on blockchain technology, which are decentralized networks that are accessible any time of the day. What you're starting to see and what you're starting to hear a lot about is tokenization of real world assets, which means instead of being able to only trade a stock, and let's use a local company in the Bay Area, let's use Apple, right? And so instead of being able to trade Apple stock only during market hours, maybe even through some type of broker, whether that be like a Morgan Stanley or a Charles Schwab or something like that, and only being able to trade Apple stock from 6:30 in the morning to 1 o'clock in the afternoon, there's no reason you can't take that same Apple stock and essentially put it in a tokenized version, which is now just a digital version of what it is today, and have that move on a blockchain rail. And now it trades 24/7, 365. And again, we're very much in the infancy stage of what we talk about tokenizing real world assets. We're not there yet today. It's all coming. It's all coming relatively quickly because most traditional banks, as you know them, the JP Morgans of the world, the Chases of the world, the BNY Mellons of the world are all getting involved in crypto, whether that be through being able to custody crypto assets at those banks, or they are themselves experimenting with tokenization and tokenizing real world assets, stocks, bonds, mutual funds, ETFs, money market funds, and making those assets available on a 24/7, 365 basis. Now, I'm going to jump in. Well, how does that pertain to real estate? Well, a lot of you have, and be honest with you here, even though I know a lot about crypto, I'm not the quintessential expert. There's people out there that even know more than I know. And so I'm going to say stuff, and you guys might know more stuff on the real estate end than I do. But what you hear a lot about in real estate and where the intersection might be with crypto, and going back to when you can tokenize assets and move them onto a blockchain and they're accessible 24/7, 365. In real estate, there's been a lot of talk of, okay, well, how is that going to impact the transaction, a real estate transaction, right? And again, I apologize, you guys can speak more eloquently than I can about things like closing costs and what's involved in transacting a piece of real estate from the buyer to the seller, whether that's real residential real estate or commercial real estate. I'm not the expert there. But when you think about, and the way I understand the transaction today, is there's a lot of expense involved in closing costs. You have to get a lot of people involved in the transaction process. But what's to say, why can't the deed to a home or the deed to a commercial piece of real estate, or any real estate for that matter, why can't the deed be moved onto a blockchain? And at that point, if it's on a blockchain, it's immutable, meaning it can't be changed, it can't be fraudulent. We can go down that road if you want to, but let's just stay high level for now. But if we can move the deed to a commercial or to a piece of real estate, whether commercial, residential, what have you, onto blockchain rails, and I actually want to sell my home to somebody else, and I'll use Skip because Skip and I have talked before. And if I want to sell my home to Skip, what's preventing me from him being able to send money to me or his bank sending money to me and me just moving the deed to my house to Skip over blockchain rails 24/7, 365? Why do we need to involve so many other parties at this point? Now, I'm saying all this conceptually because we're not there yet. But that's where I think we're going, is that it will be tremendously easier to transact any type of business over blockchain rails. And where I think it impacts the real estate business predominantly will be probably in the form of closing costs and the cost to transact and make real estate transactions. Now, again, I'm not the expert on that. And again, you've probably been hearing about this for a couple of years now, that that's where we're going. I would agree. I still think the puck is moving that direction, but I just don't think we're there yet. We're very much in the infancy stage. Where I have seen a pretty significant intersection today between real estate and crypto is a couple ways. One is you're now starting to see banks accept Bitcoin and crypto assets as collateral for loans. And so for those who would be taking out some type of mortgage, whether that be on a residential piece of real estate or a commercial piece of real estate, it used to be that banks didn't accept crypto assets as part of your collateral and or assets when they looked at the credit worthiness of the borrower. That is starting to change. Banks are very much now willing to accept Bitcoin. I got to be honest, the banks that you all might deal with from a mortgage perspective or a real estate perspective, I'm not saying every bank does, but some of the larger banks are starting to do it. BNY Mellon starting to do it. JP Morgan starting to do it. Those are some of the largest banks in the country that are now accepting crypto assets as collateral for loans. That is relatively new. That is relatively new over the last several months. A lot of that has to do, good, bad, or indifferent, with the current administration that's in place, and the current administration being incredibly friendly to crypto and trying to advance crypto and make America really the crypto epicenter of the world. So that's one piece we are actually tangibly seeing from the intersection of crypto and real estate. The other, and I wish I had a little bit more knowledge on this, but there was an article that came out, I want to say in the last couple months. The state of New Jersey actually moved, I want to say something like 300,000 deeds to homes onto a blockchain. I don't remember if it was Cardano or Avalanche. And the purpose for doing it was really more for fraud prevention and preventing fraud as it pertains to the deeds of these homes. But I think that's a step in the right direction, is what we were talking about a moment ago, where you're going to see a lot of the way transactions are being done in the real estate business very much different in 5 years than they are today, because of the use of cryptographic technology. No different than when I talk to financial advisors every day, which is what I do. I talk to and educate financial advisors on crypto and how they fit and potentially could fit into a portfolio. One of the things we talk about is how their business is going to change, right? If they understand their business of buying and selling stocks and bonds and mutual funds and ETFs and different investment products for their clients, the way they do that in 5 years is going to be very different than the way they do that today, because we're starting to see the tokenization of real world assets. I really don't have a lot of slides and any presentation to share, but we do internally put out a pretty significantly quarterly presentation with a bunch of different slides. And one that I'll share today is just kind of where we're at with the tokenization of real world assets. So I'm going to share my screen right quick. This is just a slide we have from our second quarter crypto review presentation. And it just shows the value of tokenized real world assets. And a lot of these assets are being tokenized today. And whether that's private credit assets, US Treasuries are a big thing that are already being tokenized and put into tokenized form, commodity stocks, some alternative funds, and others. So you can see now the market cap value of tokenized real world assets is actually relatively small. It's less than 25 billion as of the end of March, or I'm sorry, as of the end of June 2025. But every day we're starting to hear more and more about different versions of tokenized real world assets. And that's nothing more than just taking assets as we know them today and moving them onto a blockchain, which could be something like Ethereum or Solana or Avalanche or Cardano. This isn't real estate specific, but I think it was late last year, there was an article that came out that the state of California, I'm assuming a lot of us on the call today are in the state of California. The state of California actually moved 300,000 car titles onto the Avalanche blockchain network. A lot of it's to prevent fraud, title fraud. It's still today, the way we know of registering a vehicle in the state of California, you still if it's a new vehicle, probably have to go into the DMV and register it and, produce the title, or they'll produce the title for you. But there will be a time where I think car titles are moved onto blockchain rails, and maybe the way that we interact with the DMV changes over the next 5, 10, 15, 20 years, to where if my car title's on a blockchain and I want to sell my vehicle to Skip, what's to prevent him from sending me the money and just moving the car title to him via blockchain, via a transaction where he now owns it in a tokenized form and has that car title in a tokenized form. And maybe we have no particular need, or we eliminate some of the need for the Department of Motor Vehicles. Again, very much in the infancy stage as we talk about tokenizing real world assets. How does this impact real estate and real estate transactions going forward? There's just so many unknowns right now, but I will tell you, this is the same conversation I have with a lot of financial advisors today. The question comes up all the time, like, why do we need crypto? Like, why do we need blockchain technology? Why do we need to move real world assets and hard assets and move them into a tokenized form to where they can be moved on blockchain rails 24/7, 365? The question comes up every day. Why do we need this? I got to be honest with you. I'm not sure I actually know the answer to why we need it, but the train left the station. That's the way we're going. Everything is moving into the digital world, and we've started that over the last 15 years. We're very much in the infancy stage, but that's where we're going. So with that, I gave you guys a lot in 10 to 15 minutes. I tried to stay somewhat high level. Part of the reason why is there's a lot of unknowns at this point as far as where we're going with real estate and crypto. I will tell you that intersection's only going to get deeper and deeper. But I am happy to answer any questions that anybody has. I'm happy to take the conversation any direction that you guys think would be helpful.
I'd be glad to hear about the process of going through a real estate transaction with crypto. Now, I know that you're not a real estate expert and might not be able to have all the nuances down, but I'd like to compare what is the traditional method to what could happen, with crypto.
Yeah, I think and again, Skip, maybe I don't have the exact answer for you today, but I think, and you guys could tell me better, like when you think about a closing transaction and who is involved in the closing process, right? It's often, it's often a mortgage company, it's often the title company. The title company probably has lawyers on hand to make sure that the transaction is not fraudulent, meaning that the deed is that's on my house that I'm releasing to another party is not, some type of fraudulent deed. I guess, Skip, and I apologize, I don't have a scientific answer for you, but I think what's ultimately going to happen is you cut out a lot of middle figures in that transaction process. I don't know if it's the title company, I don't know if it's attorneys that are involved there. I don't know if it's the mortgage company. It's probably not you as the facilitator and broker and agent of the transaction. But I think it just ultimately, at the end of the day, cuts out a lot of individuals who have to have their hands involved in that transaction, which, in my opinion, and this is nothing more than my opinion, probably reduces those costs involved with transacting real estate, right? I know them as referred to as closing costs. You guys probably may know them. There's maybe the other terms that you guys use in your world. I think it greatly decreases the cost because it makes it more efficient and effective and faster to have a lot of what's done currently now done over blockchain and blockchain technology, and digital versus the way we know it today. Does that help?
Well,
Yeah.
Again, I apologize. I don't have a great answer, but hopefully that was somewhat helpful.
yeah, that was helpful. Thanks. Also, if a transaction is done with crypto, is there any mix of other kinds of assets in with the transaction, or is it all crypto? I'm thinking in terms of how do the agents get paid a commission? Do they have to get a crypto, um, you know, commission, or could they opt for cash or something else?
Yeah. Yeah, I don't think that changes so much initially. But great question. I mean, but I do think there's a point in time where, again, I don't have a crystal ball here, but I do think a lot of the way that we understand transacting commerce with currency changes. And I'm not saying that any cryptocurrency that we know today, like a Bitcoin or Ethereum or Solana or Cardano or Avalanche or any of these multiple thousands of different crypto assets out there that have their own native token, I don't think we transact in commerce with those. Where we're seeing a lot of conversation today, and maybe you've heard about this, is something that we've been that's been coming up quite a bit called stable coins. And stable coins are nothing more than digital dollars that move on blockchain rails. And where you're going to see stable coins become much more prevalent in the future going forward is how we transact business. You'll see a lot of merchants accept stable coins in addition to accepting things like Visa and MasterCard. Actually, Visa and MasterCard are both issuing their own stable coin. And again, these are nothing more than digital dollars that move on blockchain rails. These are programmable dollars because they move on blockchain. So I think, Skip, maybe there is a time where as an agent and the fee for service that you receive in working with clients and helping them, I still think for a long time we'll be paid in dollars or whatever fiat currency you choose. But there may be a time where, because of all this transactions happening via blockchain technology and crypto technology, it could be that your commission is paid in stable coins. But at the end of the day, stable coins are just digital dollars. They're pegged to the dollar. They maintain their value because they're backed by U.S. treasuries. But there is a time where you could probably say, hey, you know what? I like some other cryptocurrencies. I would like to see my commission paid to me in Bitcoin. I think that all is coming. I think the capacity and the capability for that is all coming. Doesn't mean you're going to have to, but I think the option's going to be there.
How are these digital currencies backed by treasuries, U.S. treasuries?
Yeah, so stable coins. So stable coins are a fairly new type of crypto asset. There was a piece of legislation that just went through the House, Senate, and President Trump signed off on it called the Genius Act. And that just literally passed back in June. And the Genius Act is a US law that now says that if you being a bank or an entity, want to issue a stable coin, which is just a digital dollar that moves on blockchain rails, and you want to peg that digital dollar or your stable coin to US dollars, you have to back every single dollar or stable coin with something that's guaranteed. So the Genius Act says that if you want to issue a stable coin here in the US, you've got to back it with treasuries 9 months or less. So just a kind of an anecdotal fun story for you, as I mentioned, stable coins are kind of the next big movement in the world of crypto. But you don't own stable coins to make money because stable coins are just pegged to the dollar. They're not going to fluctuate in value. You've probably seen like Bitcoin can fluctuate very rapidly. Ethereum can fluctuate its price very rapidly. It's volatile. Stable coins are pegged to the dollar. They don't move from the dollar. And the way they do that is because they're backed by US treasuries. What the Genius Act says is that if you want to issue a stable coin and have it pegged to the dollar, meaning $1 equals one stable coin, you've got to back it with US treasuries 9 months or less. So why was the US so willing to pass this law, and why is the US so vested in stablecoins? Previous to the Genius Act, there was two main stablecoin issuers in the world. There's a company called Tether. They're based in El Salvador. They're a private company. And there's a company here in the US called Circle. They're based right here in San Francisco. They are the second largest stablecoin issuer in the world. They actually just went public back in June. So they had an initial public offering of their stock back in June. They are now a publicly traded company here in the US. The stablecoin market today, and I can actually show you if you want to see it. This is actually a fun chart. The stablecoin market today globally is only about a $275 billion market. That's actually relatively small when you think about and compare it to other assets. But here's an interesting fun chart. This goes through the end of March 2025. Through March, a snapshot of March 31st, 2025, stable coins, so the two that I just mentioned, Circle and Tether, were the 17th largest holder of US treasuries in the world. They actually held more US treasuries than Saudi Arabia, more US treasuries than South Korea, and more US treasuries than Germany. So this is starting to give you a snapshot of why the US is so invested in stablecoin adoption. So Treasury Secretary Scott Bessent came out a few months ago and said that he expects the stablecoin market to grow to about $4 trillion by the year 2030. So less than 5 years from now, Scott Bessent believes that stable coins will be a $4 trillion market. What does that mean? Well, if the stable coin has to be backed, or if your dollar denominated stable coin has to be backed by US Treasuries, and the market's expected to grow from 275 billion to 4 trillion in the next 5 years, that's going to create an additional $2 to $3 trillion of demand for US Treasuries. And if the US wants the dollar to remain the global reserve currency, we need people buying our treasuries, because countries like Japan and countries like China are divesting from treasuries. So stable coins are going to be very important to the US dollar going forward, in the eyes of the US government. So that's just an anecdotal story. That has nothing to do with real estate. Sorry. I just thought I'd share that with you. Anyway, I hope that was
No, that's good for understanding.
yeah, but there are no other cryptocurrencies essentially that are backed by anything except for the service they provide. But stable coins are very different. Very
So
different.
in this type of a transaction, do you have to be so there's a seller and a buyer of whatever commodity. It doesn't matter if it's real estate or a banana.
Hmm.
Do they both have to be a crypto holder and exchange the value in that medium?
Nope.
Wallet.
Nope.
So say one wants to pay for something with their crypto value, and the other one is just has a bank account over at Chase. So do
Yeah.
they have to convert?
Yeah, it would all be great question, Julie. It would all be dependent upon what the acceptor of the funds is willing to accept. Meaning, you could say, hey, you've got a good or service that I want to pay for, and I would like to pay you in stable coins, or I would like to pay you in Bitcoin. It all depends if the seller is willing to accept that. The seller may say, no, I only accept fiat currency, so you're going to have to pay me in US dollars. But what you're going to, and so it's up to the seller at this point. Now, the seller could also say, yeah, sure, send me Bitcoin. The moment they receive the Bitcoin, they're just going to convert it into dollars. Or they might say, yeah, pay me in your stable coins, and I'm just going to go ahead and convert that to cash or whatever. But like I said, so much of this is in the infancy stage. Like right now, there's only so many vendors that will accept stable coins, right? But you're starting to see more and more of that. For example, like Walmart and Amazon have both come out and said they're going to accept issue their own stable coin. So there, I would very much venture there will be a time, I don't know when that time is, that you could easily go to Walmart and pay with stable coins. You could go onto Amazon.com for whatever good you want to purchase from them and pay with stable coins. They may want you to use their stable coins. And what you'll probably see is you're going to see a bunch of people issue their own stable coin, and they're almost going to have their own reward system tied to it, right? Like, so think about like Starbucks coffee. If you have the Starbucks coffee app on your phone and you pay with the app, you receive rewards points, right? And you can use that for future purchases of Starbucks coffee. I'm just using that as an example. There's so many entities that have rewards points, right? Whether it's credit cards, or like I have the Southwest Airlines credit card because I fly Southwest all the time. I receive reward points, right, for using my Southwest credit card. I think you're going to see the same thing with stable coins and the entity who issues them. So like if Walmart decides to issue a stable coin, and it's the Walmart stablecoin, and you go into a Walmart location and pay with Walmart stablecoins, there's probably going to be some type of rewards system in place, something like that. Because that was the other thing that the Genius Act, which I talked about momentarily, put into effect, is if you issue a stablecoin and have it dollar denominated, you got to back it with US Treasuries. The other thing that that was put into the legislation is those stablecoins cannot pay interest. So you can't hold a stable coin through Circle and Tether, and they can't pay interest to you. So that will be a differentiator between somebody's stable coin is, we know that stable coins pegged to the dollar issued in the US can't pay interest. So there's going to be some type of rewards program probably tied to the different ones. Again, we're getting ahead of ourselves, and I know we're kind of getting off the real estate piece, but I think what you'll see from a stablecoin perspective, you'll see a bunch of them issued, and then you'll see a bunch of consolidation because we won't have a need for 1,000 different stablecoin issuers or 1,000 different types of stablecoins because they're all going to be pegged to the dollar. Anyway,
So
kind of
you
got
had
off
mentioned
topic there.
earlier that there are some banks that are recognizing crypto accounts as an asset to be considered when
Mhm.
evaluating for a mortgage. I think that's where we're at right now in
Yep.
conversations with
Yep.
buyers and sellers. And so for us as real estate specialists, we will have conversations with people. And so if we had a cursory understanding of how somebody can use their crypto value, their blockchain value that they have within their own financial portfolio, to purchase a real estate asset. And I think I think there is a measure that's required of conversion, still required. So, yeah, so it's still in its infancy.
Yeah, we're still early,
Yeah,
and
it's
and
still
you're,
early.
I think you're right. I think although, like I said, some banks, like I know J.P. Morgan, I believe BNY Mellon has come out and said they will accept crypto assets as part of the overall financial picture of somebody for gauging their creditworthiness of a mortgage, or they'll allow it to be put up as collateral. I think you're right. I think still every bank, as as you see more and more banks allow that, they're still going to have their own guardrails in place, meaning one bank may say, well, we're only going to accept, because we know that these values can be somewhat volatile. We're only going to accept X%, right? Or we're going to, you may say, hey, I've got $1 million in Bitcoin, but we know that $1 million could be 800,000 in the next 2 days just because Bitcoin's volatile. They may only accept a certain amount for that. So that's very possible. Very possible.
So the other thing too, that we might want to talk about, maybe you can speak to a little bit, is all of this blockchain financial tech, fintech on
Hmm.
blockchain
Hmm.
is different than our current system, banking system, money system, right?
Hmm. Yep.
There is no profit centered entity on the blockchain. That was the whole purpose of blockchain in the first place. Can you speak to that a little bit, please?
Yeah. It's a great point because you think about like what's the benefit, all the all crypto blockchains that we know of today, that most of them that you know of are what are called decentralized networks, meaning there's no bank or government overseeing them. There's nobody running those networks. Well, there's no controlling body running those networks. So you often think about like if somebody's going to go into something, they want to be in it for a profit, or what's going to motivate them to do a job or a service, to your point. It's I can explain this at a high level because I don't want to get too far into the weeds, but there is incentive to validate the network for what's going on. And Bitcoin is very different than most of the other crypto assets out there. And any of you who have heard of Bitcoin before may have heard of something called Bitcoin mining and Bitcoin miners. Those are the entities that are validating transactions done on that network for authenticity. And they do have some incentive to do that in what's called a Bitcoin mining reward. And that's the only way Bitcoin comes to fruition. You can't randomly print Bitcoin, just like the central bank in the US or any central bank of any country can randomly print more fiat currency whenever they want. You can't do that with Bitcoin. Bitcoin only comes to fruition through mining. And mining is actually validating transactions that are done on the network for authenticity. And when they've added those transactions to the ledger and time-stamped them with authenticity, they receive a reward. That's their incentive to do that. Other networks like Ethereum, Solana, they work on a different system where their consensus mechanism, which is again just validating transactions for authenticity, are done a different way. In the world of Ethereum and Solana, it's called staking. And if you want to be part of the validation network, you have to actually put some of your own Ethereum tokens or Solana tokens up for its collateral. And in return, you receive a Solana or Ethereum staking reward because you're part of the validation network. So even though there's no one entity like a bank or government who is overseeing these blockchains and profit from them, in the world, that's the beauty of blockchain technology, is it's decentralized, but it is validated by the entities who choose to be part of the validation network. And not everyone can do it. You've got to either have money to do it via mining, like it used to be in 2008 when Bitcoin came out. Probably all of us on the call could have tried to mine Bitcoin through our home PC or laptop. Very, very difficult for individuals to do that anymore. Most of Bitcoin mining today is done through corporations who have extensive server farms set up to use. They use a lot of energy to generate a tremendous amount of computing power to solve these transactions. But yeah, there is nobody that oversees it. The profiteers, if you will, of decentralized blockchain networks are the validators of the network who are part of what's called the consensus mechanism. I know this is probably incredibly confusing, and I didn't go down the weeds there because that could be a 2-hour conversation on itself, if not longer. But that is the beauty. That's what some people love about blockchain technology is it's not controlled. It's not governed by anybody except the people that validate the network.
Yes, that's a great representation. I have a really good understanding. Thank you.
But I will tell you that's sometimes the hardest thing for people to understand who, like myself, have some gray hair that didn't spend most of my life in the digital age is how can you trust something that isn't governed by somebody, that isn't controlled by a bank? And that's the thing. A decentralized network is a trustless network, but it's monitored and validated by those individuals, entities who are chosen to do it. And at that stage, it's very hard. The other question that comes up all the time, okay, well, if there's no one controlling it, then couldn't somebody come in and hack the network? Well, never say never. Bitcoin in particular is a very, very easy thing to explain because it's very hard to hack their blockchain. Actually, Bitcoin's blockchain has never been hacked one time in the 16 years it's been around, almost 17 years. People's digital wallets have been hacked, but the network itself has never been hacked because in order to do so, you'd have to maintain 51% control of the entire Bitcoin network. And there is no bank, there is no government that has enough money to buy the energy to generate the computing power to manipulate and control 51% control of the network. But it is a confusing thing for people to understand, like, hey, this thing exists digitally, this blockchain exists digitally on the internet, and you're telling me no one controls it and no one governs it? How can I trust it? That's the beauty of it. It's trustless because it's being operated by many different people that in order to, this is really interesting too, like on Bitcoin, when a miner adds a block of transactions to the ledger, and remember that ledger's time stamped, it's visible by everybody. Any of us on the call can go look at the Bitcoin network and see the transactions being done. When that block is added, the next block can't get added on top of that until everyone else has agreed upon that previous block being legitimate. And that has worked for 17 years.
Wow.
And all the networks work the same. All the crypto blockchain networks work the same. Again, it's
So,
mind blowing for me to believe that this is the direction we're going, and it's hard for me to wrap my head around sometimes.
no kidding. So I'm thinking as agents, and I'm pretty sure that we're not going to be able to get an answer to this now, but what happens in this day and age, with the amount of knowledge and technology that we have, if we have a transaction where let's just say it's a commercial property and somebody wants to make the purchase with crypto, and what's that going to mean to you as an agent? Where are you going to be able to find your resources, know who to talk to, know the decision tree on making the transaction work? It's going to really change everything as we know. But we're right now, yeah, it is the infancy, and we don't have the answers. So if it comes up, I'm just wondering, and this is more of like a mind exercise, what are you going to do if somebody offers a purchase with crypto? And, that might be something you want to get ready for.
Again, I think
Well,
I'm not
go
answering because I
ahead.
know there is no answer, but
Yeah.
this will all take time to play out. And what I mean by that is, as much as it sounds confusing today, like Skip, you bring up a great question, but it's not anything we need to know tomorrow. And I think as we get to that point, and that could be 5 years from now, 10 years from now, 20 years from now, it'll all kind of happen clunkily but smoothly at the same time. Like it's going to seem clunky, but it will be smooth, and then it will be when it's there and done. I believe it to be will be a lot more efficient. I think it'll be an efficient way of going about transacting business. But today it sounds confusing, and wow, we're not prepared for this, and most banks or mortgage companies wouldn't even be prepared for this. So how's it going to look? But I think it'll be a smoother process than we think. It's just day to day, it's going to be clunky. Over time, it's going to seem incredibly smooth, believe it or not.
Yeah, I totally
Well,
agree, but
if
I'm
we,
thinking that, that if we do get something today, how are we going to handle it? So, that's kind of the thing to think about, do your lifeboat drill now before the ship sinks, and figure out how you're going to do a transaction with crypto.
has anybody had a conversation with a buyer that expressed the wanting to use their crypto account to purchase real estate?
Yes, I had a buyer, I think maybe 2 years ago or something, but I think he's not a serious buyer. I never even met them, but yeah, somebody contacted me and asked, he wants to buy a property with a crypto coin. So I called Old Republic titled the escrow officer, asked about it, and she said, no, they don't accept crypto currency at that point. So I don't know if there's anything changed since, but um, I think he was it was a scam.
Yeah. Okay, so here's what I'm thinking. If we have conversations with buyers that express an interest in using their Coinbase account to purchase real estate, then our reply would be, to ask them a few discovery questions, obviously, and then say, well, go to your account and go to your financial planner and find out how things are set up. You may have to convert your value from your Coinbase account into real dollars in order to bring them to the closing table. That's how it is at the moment. Now, I could go out and find another seller that's got a Coinbase account and say, all right, you're both Coinbase. Let's see if we can make a deal. That's advanced, but it could happen. So I think this is where we're at right now. And with the any type of value placed in, that was the other thought I had. Okay. So when we have buyers that that express interest in purchasing real estate, and they want to use their their investment assets, and they could be, and to me, I don't know. I mean, RSUs sound very complicated to get, into a tangible money to buy real estate, but I guess it can be done, right? So how is it? It's not probably not much different. It's like a bumpy road, I'm sure, but attainable. Am I on the right track there, Eric?
I think so. Yeah. Yeah, I think so. Again, it's all going to be based. I think your first example is fantastic, right? It very possible they may have to convert it into dollars or bring dollars to the closing table, or maybe you find a party on the other side that says, "Yeah, send me send me Bitcoin into my Coinbase wallet, and I'll accept that." That's very possible. And then yeah, it's also possible that we're just not there yet. From a like RSUs would be hard to access because they're not liquid. So yeah, you were
Okay, I
spot on.
just freaked myself out though with another car contract that's just all Coinbase. I'm sorry. I digressed. Go ahead, Lynn.
Yeah. Hi, Eric. Nice to meet you. I'm Lynn.
Hi.
And yeah, I do a lot and listings, but I had actually a buyer referral, and they wanted to use crypto. And at the time, you know, because I was busy with working with sellers, I referred them to one of my friends. And so they literally, when they first was referred to me, their it was 2.5 million, and where it was like, okay, that's a little challenging for this area for the schools they wanted in Los Gatos, and they went from that to 4.7 million within like a year and a half of connecting them with you know, an agent friend. So that was pretty all in crypto. I could ask a little bit regarding how that worked out. I wasn't as involved because I was just
Mhm.
a referral agent, but I know it did happen, most likely with a traditional escrow. So I'm sorry, there was, oh, Yoon who said that the escrow company did. I think there are some, but there's also, have you heard of proppy.com?
I have not, but that doesn't mean anything just because I haven't heard of it. There's a lot of things I don't know.
Oh, okay. Yes. And that's why we have these masterminds. Can I just share screen? I was just going to show you guys really quick. Just
Yep.
give me, okay, awesome. Okay. So I was introduced by my business partner to this company named Proppy, and it's because, you know, I have, you know, listings that I obviously want to expose to as the broadest audience as possible, including people that are interested in using crypto to purchase properties. And so I just wanted to just point out this does exist.
Amazing.
Yeah, there is an AI assisted title and escrow on chain for real estate. So just in case anyone's interested. Now I don't have too much, and I pluck out my white hairs by the way. So you don't see that, but I do have them, and I did not grow up with technology like this, but this whole thing is like a foreign language to me. I have a friend who's really, really, really into like all of this. And, you know, I had her when we were in COVID just come on like a wealth building mastermind that I did with some agents. And, you know, she's like, oh, you need to like get uphold and you need to, you know, invest in all of these different metals and do this. So I'm just like, okay, fine. I have a little play money, just put it here and there. And actually, I got a letter from Uphold and saying that your since your account has been inactive, we're gonna like take it over if we don't hear from you for a certain. I'm like that hands off. It's like okay, you know, I don't get it, but I love my friend. I trust her. Let me just play around and you know invest and forget it. So, but just yeah, wanted to share that with all of you.
No,
That's
thanks for
amazing.
I wasn't aware either. Thanks for sharing that. That's terrific.
Oh, of course, I'll drop it in the chat if that helps anyone.
Oh, that'd be great.
Yeah.
Jessica, did you have a question? Oh,
I'm
I just saw you.
no, I've been following. I mean, I have it's you know, while I'm on the phone and listening to Eric, I'm like texting my friend Giovanni, he got into XRP very early and he convinced me to do it because he's like a nurse living in senior living, comes from a Hispanic background, like nobody's listening to him, right? And I'm like, I'll buy some, you know, just, you know, and he has XRP nurse on his license plate. He
Oh
has
my
a blog,
gosh.
he has a blog called XRP Nurse. So he like he rides this world that I lived in on home care senior living, but he's so passionate about crypto. And he's like, oh yeah. And he's like, while you're talking, he's like sending me all these companies that like he already knows about because he's already, and I'm like, you know, and I'm like, I'm on Uphold, I'm Coinbase, and it's all because of him. But like he's so far advanced. And yes, I see it happening. And Julie's so good at bringing people, roping such different people into these conversations to just be on the forefront of, you know, and plant the seeds. Like you said, you know, this is just kind of like your first little taste and what's to happen. But if you're not paying attention, you're going to be left behind. That's the bottom line. It's the bottom line.
Well, this was
Couldn't
Skip's
agree with you more.
idea. This
Well,
is part
I'm
of the,
sorry,
this is part
Julie.
of
Sorry,
Skip's
Skip.
idea. Yeah,
I
go
meant to
ahead.
praise you, not Julie.
This is the advanced seniors real estate specialist because even just this much just rises us above all of our colleagues that you know that we work with. And the nice thing is too, so we learn about these things and we can share it with all of our colleagues, SRES or not. And in all of the industries, so we're part of the senior care economy. And so we and so we can bring this knowledge to our colleagues and our homeowners and our clients and friends and just everybody. Anybody else have any observations, any encounters with anybody speaking of prospects that talked about crypto? Not yet. So a good portion of us are in Silicon Valley, so it is a conversation that does come up pretty regularly. And so having what I was thinking validated by you, Eric, which I appreciate very much, is that when I do have conversations with people and they tell me about their story and what their intentions are, then I can confidently respond to them, with a suggestion that they move forward on, and then and then get back to me on when you want to go like buy some real estate, because
Mhm.
I have a checklist that the title company wants me to meet, and so I'm a little bit bound by that.
Sure.
And if I go to my title rep and my escrow officer and I say, "Oh, here's their Coinbase book," and they're like, "Yeah, no, yeah, no, thanks, Julie. Go, no." So, anyway, thank you so much. I really appreciate all of this wonderful information, and I know it's just the beginning, just the beginning.
I
Uh,
can't even say we even scratched the surface.
no,
There's a lot to know, but I appreciate Jessica's comments because I wholeheartedly agree. You don't need to be an expert in this. You just need to know this is just the way the world's going. The world's moving into a digital world. And you know, I applaud you all for being open to it, just open to the conversation. Again, I hope everyone just took away from today that it was just supposed to be educational and fun, not anything pressing or anything like that. And every disruptive technology in history has come with resistance. And that's kind of where we're at today. And a lot of the resistance we find with crypto and blockchain technology today is that most people don't understand it. And that's fine. But I couldn't tell you how my watch works either. I couldn't tell you how email gets sent, but it's just where we're going, when we cross that time. And if anyone's an academic out there and likes to read, this is a phenomenal book. It was actually printed, it was published back in 2000. It's called The Engine That Moves Markets. You can get it on Amazon. I think it's a little expensive today because I don't think if it's actively published anymore, but it's a book that goes back about 3 centuries and talks about all these disruptive technologies, how we went from the canal system in Europe to move goods and services to the railroads, and then how the railroads were met with resistance. And then obviously one we're all familiar with because we all probably attended elementary school at some point, and that's the telegraph to the telephone, right? The horse-drawn carriage to the automobile. The internet. Why did we need the internet? Like, what did the internet do for us back in 2000, right? When it really came to fruition, right? All of these disruptive technologies are just what they are, disruptive technologies that if you don't embrace, you typically get left behind. And this is no different where we're at with blockchain and crypto. Remember, we're 15 years into it. This is a technology that's really 15 years old. We have thousands of years of experience with gold. We have hundreds of years of experience with stocks. We have, I would argue, 30-ish years of experience with the internet. This is just new.
the one thing that I connected with when I was learning about blockchain and crypto was that it is decentralized. So and at the very highest level, it is decentralized. So there's no bank president, there's no Fed, it's all operated by the participants participating. And
That's
it's
exactly right.
self-regulated.
Yep, that's exactly right.
And it's a huge concept for people to learn, to observe, learn, and grasp. The other thing that I thought, and this was early on when I was first learning about blockchain, and I was like, oh, that sounds kind of interesting. And then here we are, we've come along. So there is an aspect in blockchain technology, the technology of blockchain. It's digital real estate. Digital real estate is real estate, but it's digital.
You can own tokens of the real estate. Yes.
Exactly. And in my mind, and I could be completely wrong, but all I pictured was in these data centers, you can be an investor and you bought and own and operate and receive passive income from, a bit or an amount of bits in a data center in the physical. So I could be like a little on, a little off, but it just caught me at digital real estate. I'm like, oh, I need to know about that.
Well, you're mostly on, and that's one thing you'll probably see eventually happen too. Is like think about real estate investment trusts, right? These are nothing more than shares and ownership of packages and bundles of different real estate, right? And those shares represent some ownership, and those shares can go up and down in value based on the performance of the underlying real estate. There's no different than why can't you take a Manhattan skyscraper and tokenize it? And here the building exists physically, but why can't you issue digital tokens of that real estate where it's basically like shares of a real estate investment trust, but now they're just tokens. Those tokens could go up and down in value, but instead of like shares of a real estate investment trust that would only trade during market hours, the tokens of this particular building in downtown Manhattan could trade 24/7. That's stuff that's going to come too. That's another piece of the real estate thing I didn't get into today. Again, very much this is just what we're thinking at this point.
Yeah.
We don't have this. I don't think you can actually buy any tokens of a commercial real estate building in Manhattan today, but it's going that direction, right? That's
Well,
the
I
other thing.
think we need,
Go ahead,
I
Skip.
think that we need to have you back in the future so that we can get a progress report on what this stuff is doing. I'm sure there'll be new ideas, and probably some of the stuff that we talked about will be online and available to everybody, and hopefully we'll know a little bit about it. But this is an ongoing project, as far as I'm concerned, and we'd like to hear more about it down the road then.
Well, if you guys are kind enough to have me back, I would love to do it.
Oh, that'd be great.
Be my pleasure.
Oh yeah, because this is just the tip of the iceberg. It's in a really deep rabbit hole.
Wholeheartedly agree. Wholeheartedly agree.
All right, thank you so much, Eric. And does anybody else have any questions, any observations?
Well, just remember next week, we have Aaron Rubin returning and talking about house rich, cash poor, which I think is going to be an interesting topic. So you might want to tune in for that.
Yeah, everything's in the bulletin. I'll have all of Eric's
bulletin?
information in the bulletin as well. And then if anybody has any follow-up ideas, just let me know. And yeah, and we'll see everybody next week with Aaron. I'm kind of looking forward to that.
Thank you for having me.
Thank
Everybody have a great
you.
day.
Thank you,
We really
Eric.
appreciate it.
Appreciate
Pleasure's
it.
mine.
Thank you all.
Thank you so
Have a
much.
Okay, everybody have a good week.
Thank you. Bye bye.